The Nasdaq 100 gained just 0.1% across 5 trading sessions. Almost flat. Yet its 1-hour RSI hit 7, then 95, nearly the entire scale. How can a market go nowhere while momentum screams both extremes? The answer is hidden in the violent journey that the closing return erases.
That sounds impossible only if RSI is treated like a price label. It is not saying the Nasdaq is expensive at 95 or cheap at 7.
And neither reading is an automatic instruction. An oscillator can reach an extreme because momentum became unusually one-sided for a short stretch. That says something about the path, not what must happen next.
To solve it, we need to reconstruct the path, and separate what price measures from what RSI measures. Start with the price path. The first hourly close in this 5-session sample was near 29,289. The latest close was near 29,311, a gain of roughly 0.1%.
But the weekly range was almost 5%. Price traded above 30,300 and below 28,900 before finishing near its starting point. The endpoint looks quiet. The journey was not.
These are 5 actual trading sessions from June 26 through July 2. The July 3 holiday contributes no artificial zero bar. The near-flat return comes from traded prices, not from treating the closure as a quiet session. A 5-session return compares 2 points. It can hide every acceleration, reversal, and gap between them.
RSI watches that path. On a 1-hour chart, the standard 14-period RSI compares the size of recent upward closes with recent downward closes. It is a rolling momentum calculation, not a score for the entire week.
Early in the window, a concentrated run of weaker hourly closes pushed the 1-hour RSI as low as about 7. Selling pressure had controlled most of the recent bars.
Genuine, but local. The reading described roughly 14 hourly periods. It did not guarantee continuation or tell us that every longer timeframe was equally stretched.
Then the sequence changed. A cluster of stronger closes replaced the earlier losses inside the rolling window, and RSI rose as high as about 95.
Same index, same week, opposite momentum regime.
And still no contradiction. Once old losses roll out of the calculation and fresh gains enter, the ratio can reverse quickly. RSI has memory, but its memory is short and defined by the chosen period.
Here is the useful mental model. Price tells us where the market is. RSI tells us how forcefully it has been moving over a selected window.
That is why an overbought reading can persist during a strong trend. If upward closes keep replacing upward closes, momentum remains elevated even after RSI crosses 70.
It is also why oversold does not mean undervalued. RSI knows nothing about earnings, cash flow, interest rates, or fair value. It only sees the recent pattern of gains and losses.
The scammer version says there is a secret threshold that guarantees the turn. The honest version is less magical and more useful. 70 and 30 flag unusual momentum conditions that require context. Context begins with time frame. A 1-hour RSI can be oversold while the daily RSI remains neutral. Both can be correct because they answer different questions.
Then look for confirmation. Does price hold beyond the recent range? Does RSI remain strong on the next push, or does momentum fade while price makes another high?
And define invalidation without pretending to predict. If an apparent rebound cannot hold its range and RSI weakens again, the first momentum shift was temporary. If price stabilizes while RSI recovers from an extreme, selling pressure is losing intensity, not necessarily reversing into a durable trend.
RSI works best as one layer of evidence, price structure first, momentum second, and the relevant timeframe written on the chart. So the Nasdaq did not have a quiet week. It had a nearly flat destination after a violent rout. That is how 1-hour RSI could visit both extremes while the 5-session return stayed close to zero.
The low reading captured a burst of downward control. The later high captured a burst of upward control.
Neither number predicted the ending by itself.
The next time RSI flashes 70 or 30, do not ask, is this the trade? Ask 3 better questions. Which time frame am I measuring? What price path created the reading? And what evidence would confirm that momentum is continuing rather than fading? That is the experiment. Subscribe for the next Weekend Lab, and follow the daily market notes at Market Validation Lab on X.